Good evening and welcome to this edition of Capital Market Live on Channels Television, where the market speaks and we analyze. I'm Will Ibang. Let's check in on equities performance this week. Let's begin with markets in outside Nigeria. First up, Europe. EU stocks closed low on Friday as inflation concerns returned to global markets. The Stoxx 600 index fell 1.6%, with major markets across London, Paris, and Frankfurt and Milan ending in the red. Now, investors reacted to stronger U.S. inflation data, rising oil prices, and fresh political uncertainty in the UK involving Prime Minister Keir Starmer. Now let's look at Asia now. The markets closed lower as investors reacted to a major sell-off in technology stocks. South Korea's Kospi dropped more than 6% after retreating from a record high led by losses in major tech companies. We saw that Japan's Nikkei 225 dropping nearly 2%, while Hong Kong's Hang Seng lost 1.6%. Mainland China's Shanghai index also closed lower at 1.02%. And the market decline came as investors monitored the second day of high-stakes U.S.-China talks in Beijing. And let's look at U.S. markets, how they performed on Friday. They closed sharply lower on Friday as tech shares declined and Treasury yields surged following the Trump-Xi summit in Beijing. And the Dow Jones Industrial Average, you see that losing more than 500 points, while the S&P 500 and the Nasdaq also ended lower. Investors reacted cautiously after the high-level U.S.-China talks ended without major policy breakthroughs, raising concerns about trade and economic growth. Meanwhile, rising Treasury yields added pressure to markets, with the 30-year U.S. bond yield climbing above 5.1%. And let's over now to the NASD counter, where the market ended the week on a positive note, with the NSI rising 0.71% to 4,188.41 points. Market cap stood at 2.51 trillion naira. Trading activity was mixed. Volume, we see that surged sharply by 108.8%, and also value and the number of deals that declined. Market gainers, we see that led by Priceline, Campina, Wamco, Nigeria, IPO PLC, and Lighthouse Financial Services. Now on the losers chart, were NIPCO PLC, UBA Property and Company, and Food Concepts PLC. And Priceline, Campina, Wamco, Nigeria, Central Securities Clearance System, and NIPCO PLC recorded the highest trading activity during the week. Now let's check in with the domestic equities market, that's the NGX. That closed the week on a positive note, with the all-share index rising 2.27% to 250,330.92 points. Market cap also climbed 2.13% to 160.44 trillion naira. Now, trading activity ended strong with higher volume, value, and the number of deals recorded across the week. Sector performance was largely positive, led by industrial goods, banking, insurance, and consumer goods. However, the oil and gas sector declined. Top gainers included Berger Paints, Score Milk Nigeria, and Dar Communications, while Zich's Agro-Allied Industries, the Initiate PLC, and MPF Microfinance Bank led the losers chart. First Holdco, United Bank for Africa, and Chams Holding Company were among the most actively traded stocks. Now let's look at a story making rounds during the week. We saw Nigeria's pension regulator, PENCOM, has approved pension fund administrators to invest in the planned Dangote Petroleum Refinery initial public offering, as IPO coming up. And the approval waives key requirements such as profitability and dividend history, citing the refinery's strategic importance to the economy. PENCOM says the decision is aimed at directing long-term pension funds into major national infrastructure and supporting economic growth. The Dangote Refinery IPO is expected to be one of the largest in Africa, with a multi-billion-dollar valuation target. The regulator stresses the waiver is a special one-off arrangement and does not change existing investment rules. Now to 50,000 points. That's where the NGX now stands, a milestone that would have seemed impossible just 3 years ago when the Naira crisis was shaking investor confidence to its core, and the world has taken notice. Just recently, we see the S&P Global upgraded Nigeria's credit rating for the first time in 14 years from B- to B. A signal that the reform story is no longer just a domestic conversation. Today, the NGX is one of the strongest performing markets anywhere in the world in 2026. But with that kind of run comes a very important question, one that separates smart investors from excited ones. Is this rally built on real value, or are we simply caught up in the momentum? Joining me today to break it all down is Mr. Ambrose Omordion, Chief Research Officer, Investdata Consulting. Ambrose, welcome.
Yeah, thanks for having me again.
Ambrose, is really a big one in the market. Investors are really on a frenzy, excited, cautious. But for you, that follow the markets every day, seeing this kind of numbers, we're seeing that year to date, 60%. We've crossed 250,000 points this week. That's historical. And what is your gut reaction after seeing this? Is it excitement or is it caution you're feeling?
For me, yes, it's a mist. Yeah, some stocks are really gone up, some are yet to move. But the good news is that if you look at Nigeria stock market or NGX generally, our stocks are still undervalued. Compared to other emerging markets, where we are. For the emerging market index, it's about 15.5 times. I mean, say 15 times. That means our own, P ratio here in Nigeria is about between 14 to 16 times. That means that means our market is still very, very undervalued, which also tells you that the possibility of seeing more inflow of funds is there, because every investor wants to buy into value and also buy a price when it is low, so that when they move up, you can say, and that's the beauty of stock market. And now open the windows, like as you just introduced, some rating companies are already rating Nigeria high. Not only that, we have seen that there's a window that we can qualify to back again. By September, that window will allow foreign investors to come into our market. And also the pension fund or institutional investors in Nigeria are not sleeping. They are not waiting for the foreigners to come and take the market from them. They also buy into value, because the window that the pension have lifted for them to invest in equity space is also reflecting on the volume we're seeing today. For me, it's a good story for Nigeria. So it's a reflection of also the economy. Okay. But many people say, oh, Nigeria economy is twisted to one side. It's not trickling down to the to the grassroots. But I believe that as you are entering another phase again, with the reform being sustained, we don't need a policy that will start implementing the next day, so the plan go back again. That will distort all this we are seeing. I think government should continue with their policy and sustain it, not a policy that was a weakness before now that was to take us back. For me, it's a good news for Nigerian market. Like you just mentioned, all over the world, both Nigerians abroad, the foreign investors are looking at the way to now, because our market ranking better, one of the best markets in the world. That happen alone, want to look at what is happening in this economy, and also our macroeconomic data also has improved to show that yes, there is opportunity now. For me, there's no cause for alarm, but only that investors should know their goal, know where to be in stock, also know when to be in stock. It's a cycle.
Okay, but what some people may be saying, that we probably are getting ahead of ourselves here. And yes, that some stocks have simply run too far, too fast. So yesterday we saw the data. You talked about the macroeconomic data coming in. But yesterday, the data that didn't help. We saw inflation. April inflation ticked up 15.69%. So is the NGX overvalued right now? You mentioned it's undervalued, but for some stocks, are we seeing an overvaluation, or is there still room to run for the NGX?
There's still room for it to run. Some players in the market are for long term, while some are for short term players. And like I said, you buy into value when the market have not identified the value. And like you just mentioned, we're just seeing our inflation ticking up from 15.38 to 15.68. That means looking up. But if you look at the figure that came from first quarter, let's not look at the previous year, 2025. Let's look at the current financial year. The first figure for the first quarter of this year that came to the market. Look at the top lines of many companies there. I tell people that if you really want to measure company that is performing well, look at the nation where you are staying. Look at their inflation figure times by 2. See whether there's company posting figure above that. And if you look at our figure that came from our market, most of you are posting even 3-digit figure. For me, it's a good number. Yes, people will say, oh, it has not reflected what is happening in the Middle East. But I'll tell you that Nigeria economy is peculiar to lots of things. Don't forget that we had COVID-19. Since then, we have seen that our equities or company market has constantly paid dividend, also improved their performance. That means during headwinds, our corporate body here knows how to manage, navigate it successfully. I believe that even when we are saying, oh, let's wait to see the half-year result, that what is happening, I agree, some sectors will be affected positively, some will be affected negatively, but I believe that because of the peculiarity of our own environment, there's some companies that will also survive. That means every investor should look at what companies are going to sustain their Q1 positive, Q2 positive, because that's when a company is trending up with the positive earnings. And also, we have seen handsome reward in previous to 2025. For me, it's a signal that our market is still undervalued.
Okay.
And investors can still take opportunity of expectation of Q2 number to start even buying into value before the number hit the market.
Okay, well, let's look under the bonnet of this rally and some of these numbers you've mentioned now, because it's clearly not uniform across the sectors. The industrial index, if we looked at, we have that on the screen, is up over 118% year to date. Banking is up nearly 58%. Insurance is up 6.6%. What does that dispersion tell us about the market? Is capital rotating intelligently, or are we just chasing momentum?
You just said it. I said there are different types of investors in the market. They are what called momentum investor, what called value investor, dividend investor. Value investor looking at the future. Momentum investor, what is happening in the stock. So that's why some people chase stock at the trial and they now buy at the top before they start coming down. But if you identify a stock before, you are looking for value. But when there's momentum, there's something pushing a stock, we want to follow that momentum. And that is how also technical analysis will come in. To see whether that momentum will be sustained and also know when to buy and when to exit. For me, you have said it now, you can see that year to date, most of the indices are almost above the market generally. But those that are below market performance, it's an opportunity. And also, if you have looked at the market last week, we saw fund rotation, between the healthcare sector and insurance sector. It's also a sign that, yes, investors are looking at where stocks are yet to move, let's position, because as we're expecting liquidity, to the market, into the market, I believe that that's what will change the dynamics of the market. And don't forget that in any market, the power of demand and supply, buyer and seller will always give direction where the market is going. And there's liquidity in the market, but the market will still go here. And I tell you, our banks are really solid. And for that, they're also in Nigeria. And also the size of any economy will also reflect on the bank. Okay. If we are saying that our banks are solid and the economy is moving, then there's liquidity to drive the system.
Okay, so I'm just going to ask a question now. I'm sure that a lot of people watching that. For the retail investor watching this program right now, someone will probably say 500,000 naira to deploy in the market. Which sectors will you say they should put their money at? And maybe some stocks they should be cautious about.
Okay, let's say, since even investment is against the future, you said that inflation has just tick up, for like 2 months now. We've seen for 2 times, and also we expect to have our MPC meeting, the week we are entering. If it comes, it also keep rate unchanged. Fine, but knowing that if rate is hiked tomorrow, they are still going to benefit from that, which is the banking sector. But just saying that, banks are solid now, they have liquidity. That means banks also classify a lot of things. Now, banks are just cleaning their books from 2025, because of non-performing loan. But now that they are sitting on kind of this liquidity, and you expect them to go and lend to the same people that they lend to and they make provision for, that means bank will play, with the money around the market, around the economy. But I believe that the holding structure of the bank is also a plus for the bank to know it's like this money they are sitting on. For me, the bank is also a place that every investor in Nigeria, whether you are institutional, you are retail investor, is a place to look at. And don't forget that in the of Nigeria market, the bank is the most consistent dividend paying sector. Apart from what we just saw, because of provision, CBN and made some of them not to pay dividend for this 2025 financial year. But I believe that if before end of half year, able to clean up their book, and tell you that before end of 2026, we'll see also some interim dividend from the sector, and at the end of the year, most of them also pay dividend. But don't forget that with this, what they're having today, banks are a place to go because they have fun to play around the economy, and that also reflects on their number. And I said always that on the long run, the short run, price will feed on earnings. And if earnings are coming positive, it will change the face of prices.
Okay, so before we continue, let's take a quick break. When we come back, just hold your thought there. We'll take a moment now. Capital Market continues right after the break. Stay tuned. Welcome back. Just joined us. We're watching Capital Market live on Channels Television. We've been talking about the rally on the NGX and really where investors should be putting their money. We still have Mr. Ambrose Omordion, Chief Research Officer, Investdata Consulting, discussing these important issues that matter to you. Let's just go back to Mr. Ambrose. You mentioned the banking stocks and the banking sector, and that really triggered something in me, because I know that it affected every ordinary investor out there. A lot of them who invested in the market, especially expecting income from, the dividends. But we saw some banks paid and some banks did not pay any dividend. I'm sure it was a very painful experience for some of them. But most importantly right now, why did this happen, and what are the banks? Have they cleared up their loans? Have they cleared up their books? What are they telling investors out there?
No, actually, the reason why there was no dividend in some of the banks is because they have to clean their book. And when a bank has cleaned their balance sheet, everything is in order. Subsequently, those provisions that are made will turn profit when they start coming in. But like I said, every investment is again the future. We have seen those were able to scale it through, were able to pay dividend. Well, we saw some of the banks also that were also, because of provision, they were unable to pay dividend. Like I said at the beginning, that towards the end of first half of the year, yes, we will know their position. But since I said that every investment is in the future, it is time that investors look at who are those banks that are yet to make provision, those that have done the provision, those that also coming out of the wool that will start paying no dividend before the end of 2020.
But we know them. We know the Fugas have not paid the dividend. We know Access did not pay, UBA did not pay. So what is that story telling investors?
No, it's happened. These are risk associated with each individual company. That's why I say, in equity investment, risk on a company is what we're investing for. We're investing on. But I believe that since there's a clear direction now, CBN that make provision, and subsequently they might allow them to start paying dividend if we're able to clear before, like I said, before the end of the first half of the year. But I see a lot of potential in those banks that do not even pay dividend. Life of UBA, Access, even First World Cup, I've seen that a kind of restructuring, a kind of a new move that is happening in those banks. I believe that every investor has different investment objectives. Like I said, there are some traders, some are investors. If I look for value in the banking sector, I see the life of UBA as an approach position, the life of Access. But for the GT code, the Zenith Bank, the First World Code, it's not that they don't have value. They have value, but I think if, like I said it at the beginning, that your investment goal determine where are you putting. I tell you that it is easier for the life of Access Bank, the life of UBA, to double compared to those that are already at 130, 128. That means investors that has medium and long-term investment objectives can start keying there, and because it's anywhere in the world, banking is the engine of any economy. That means these banks will come out from their war and also pay good dividend. Not only that, when we were expecting to see foreign investors coming, don't forget that foreign investors will target a well-regulated industry or sector, which bank is one of them. And they come out, this bank did not pay dividend. It's you and I will be complaining that didn't pay dividend for 2025. If those foreign investors see value in these banks, they start taking position. And don't forget also the operating structure of these banks. We know that in UBA now, as to speak today, about 62 to 62% of their earnings come from their offshore branches. And also, they have said that, this one-off clean-off they've done. That means also when we want to see those numbers coming in the face of UBA, for me, I see that it's a place that design investors should look their way, because I see value in that bank. For me, there's no cause of alarm. Dividend is part of expectation in equity investment. If they don't come, don't mean that there's no subsequent comment. For me, I believe that capital appreciation and subsequent dividend will come. Don't do it because of what happened in 2025 to look away from banks that have value because you want dividend alone. I said that we're not in the market for dividend alone, we're for the market for different type of return. I believe that those opportunities we are seeing in Access, UBA, for me, it's a good one. Yes, we know that the big name like Zenith Bank and they show strength, they pay dividend, and that will also continue. For me, investors should not panic that the bank is not paying, that means the bank is down. No, it's just regulators standing that we must make our bank solid, clean for investors to protect you and I also, so that we are buying into value. For me, it's a good move from CBN, and the banks are taking it, and also they are not sleeping. They are moved also to recover those loans. At the end of the day, become a profit for them. For me, investors should look at that way. But subsequently, we start seeing these numbers doubling from 44 naira to 80 naira. That is 100%. From 25 naira to 50 naira. That is 100%. But your investment project should guide you. Are you a medium-term investor? Are you a long-term? Are you a trader? Trader might also. I will not look at the world of these banks for now. Don't look at other setup. But for value investors that are accumulating, this is not investor. They are seeing value always in that bank. And that's why you can see volume during the week in UBA and Access, because they are seeing that, it's an opportunity for us to buy in before the move starts.
Okay, so for banks like UBA and the rest that you've mentioned, how do investors now know the difference from a bank that is actually genuinely cleaning up their books, resetting, and those that are, have deeper problems in their balance sheets?
If you look at if you have seen the results, their full year and their first quarter, it's clear in the number that they have made provision. And that provision is not the first time banks have made provision in Nigeria. I believe that during the time of when we had the economy was in a recession, where crude oil price dropped as low as almost $25, and they lend, the oil sector was the major sector they lend to. That also shook them that period. But they're able to come out from. For me, this one is also not now come out from. I believe that banks are too resilient, are too strong to go, because what they have to do, the kind of capital they are sitting on, the banks are solid to come up from all this what like crazy problem for these few banks. It's not something that is going to kill them or going to swallow them. The bank will come out better and stronger.
But for UBA, it was quite dramatic. That knee-jerk reaction from investors was really biting. You say right now they're at around 44, trading around 44 naira per share at the market. They're down from that all-time high of 55 naira that we saw just weeks ago. What's your honest assessment? Is this a recovery play or a value trap for investors going to UBA at this moment? For me,
it's already on a recovery move. It's not a trap at all, because I tell you that since the investment is again the future, it's a company that moving. Yes, you might say with their first quarter and full year, there's some disclosures you are saying there. But I tell you that half year results also clear the doubt where they are coming from. Also, they will have also done recovery before the end of half year. Also reflect on the number. For me, you will not invest now before they see that number. It's only baby investors want to wait until they see number. But if you know that yes, there's already a move these banks are making. Especially, I see the move of the management. They are not sleeping, putting that out. All those where they have issue of non-performing loan, they make provision. They're going to also chase those people and bring money back. You see what happened in first quarter? That within this first quarter, they got almost like 19 billion from non-performing loan. They make provision. Automatically become a profit to them. I see that thing happen also in UBA or Access. Going into the future. For me, these banks are where you should put our money. Any Nigerian investor should not look away from banking sector, whether a foreign or long-term investor. That sector has a lot of potential to create wealth for design investors. You mentioned the offshore banking activities. We know that our Nigerian banks are not just domestic anymore. They, they operate outside Nigeria. Are they making real profit from this offshore investments, offshore branches? Yes, for our bank, new bank, like some banks are just stepping out from Nigeria. We have branches all that, but in Africa, I think the new banks like Zenith Bank is stepping out. They have in UK now and other Africa, But UBA before now has gone ahead to more than almost 26 countries now in Africa where they are operating. And also, like I said earlier, that if you look at their bottom line, their earnings, about 60 to 62% come from those foreign. And also, Nigeria also has a home base where, for me, I believe that is a real plus for them. Don't forget that they come in dollar, they're not coming in naira. It's not because we're having stability in Nigeria. That's why the banks have shined when there was naira revaluation. They saw stable. Now, this stability also opened them to do their core business. But I believe that banks now are moving from just interest business, but most of them are in fees and also digital print, where that now we're seeing that they are coming with different products, that their pay platform are effective. That also boosts their performance in 2026 and beyond, because I see that banks they are shifting from just depending on interest rates, MPR, fine, but that fees is very, very important. These are non-interest income that they want to work. Also digital, where you have a digital footprint, also going to boost their earnings. For me, I see that a bank like UBA that have spread much in the African country is a plus. And then after this show, UBA will surprise the market. You're quite bullish on UBA there, but what's your outlook for UBA the first quarter? What are we expecting from that? We're seeing the first quarter already. We're looking at the half year. Yeah, I see that the recovery that we expect to see this production also improve the number. I would say I see that I'm still bullish on, like you just said, because I see that when you see a stock that at low price, not because of there is a change of a business, or they are not into their business, their core business is not bringing money. It's because of regulations. You must clean your book. You can see that their top line is in trillions. Most of the banks, the figures are in trillions. Our banks are solid. I believe that also will be a plus, not only for UBA. We've seen that trillions in Logistic Code, in Zenith Bank, Access Bank. We tell you that our banks are big, and with the money they are sitting on, they will do more business that also impact their bottom line and the top line. Okay, so for someone watching right now, what's your outlook? They have some savings, they have some money, they want to put it somewhere. Are the figures you mentioned, the banks? So where can they put their money? What's the outlook for the NGX as well? What do you see for the rest of 2026, especially going into election year? What do you see for the NGX? I tell you that for those that go into the market, your investment objective is very, very important. If you are a dividend income investor, You want to target the life of Zenith Bank. You have, they paid last year, they're likely to pay also. But for those that are looking for value, because I tell you that it's not only for dividend who are in the market or invest for. Dividend is good. They come as as a rent to us. When they come, we'll smile. Like I believe that this week now many investors are smiling to the bank because it was coming from left and right. Then I believe that for those that are dividend income investors, let me target GTB and the Zenith Bank, like stock like a Women Bank or Stanbic, they are paid, or ETI. But for this one that are yet, they don't pay dividend for 2025. For me, prices have corrected, they pull back, market have punished them for that. This is the time for you to buy because you are not investing for that dividend. I tell you, if they are paying dividend of 1 naira and make capital appreciation of 4 naira, are you not better off capital appreciation of 4 naira than dividend of 4 naira? For me, I think I will stay put with those banks that are done now that can easily multiply in terms of appreciation than waiting for dividend. That is a different investment objective also the kind of stock we should pitch your tent with.
So take advantage of the dip to buy and increase your portfolio.
Like you just mentioned, if you have 500,000 naira, if you want to buy stock like, I'm not marketing any bank, bank that's selling above 100, you know how many units you have. But if you're buying stock that's selling to 25, 40 naira, 44 naira, you're going to get more volume. And also, if they double, you're going to more returns. This is the way it works.
Definitely. 250,000 points is not a joke on the NGX.
No, I'm going to fly more than what I said. The liquidity is coming.
Definitely. So every investor who stayed through the Naira crisis, the NGX is telling them right now they were right to stay because they're going to definitely reward them. Thank you so much, Mr. Ambrose Omordion, Chief Research Officer, Investdata Consulting. Many thanks for stopping by on Capital Markets.
Thanks for having me.
And that's a wrap on this edition of Capital Market. Remember, whether the markets are bullish or bearish, knowledge is your best investment. Keep watching, keep learning, and keep growing your financial savvy. You can catch this again on our YouTube channel. I'm Will Ibong. Thanks for watching. Bye for now.